Ladies and gentlemen, welcome to Wealth Dumb. And some of the major banks have reported their earnings, so we're going to go through a couple of them. But in this video, we're especially going to talk about JPMorgan Chase reported the Q4 2024 earnings, and we're going to go over their financial release. In this is basically the presentation. Link to this is down in the description below. Also going to find there the link to my blog post when I have the detailed analysis, which I'm going to read you now from. I went over it and I only blocked out the basics. So if you want to look through the presentation, the link is down in the description. And also if you want to check out the highlights, the link to the blog post is down in the description as always. This being said, my name is Norbert BM. This is Wealth Dumb. Let's get started. Headlines for JP Morgan, which delivered robust performance in the fourth quarter, demonstrating its resilience in this segment. So here's a couple of headline metrics. Net income, let's go up here. A net income was 14 billion, a increase of 4.7 billion year to year. Earnings per share, EPS, $4.81 billion per share. I'm only talking in billions. So $4.81 a share, up from 3.04 in the fourth quarter. Revenue was 43.7 billion, a increase of 9% year over year. Return to tangible common equity was 21%, up from 15% in the fourth quarter. Also, let's talk about overhead ratio, improved to 52 from 61, reflecting enhanced cost management. And that is great. That's excellent to see. So a decrease of 9% in cost. So let's talk about the segment highlights. Consumer and Community Banking, CCB. Revenue up 1% to 18.4 billion, driven by growth in card services and auto lending. The net income was 4.5 billion, growth of 6% year to year, impacted by high credit costs and revenue and reserve builds. So a couple of key metrics here. Debit and credit cards solves volume of they rose 8% to 478 billion. After mobile consumers increased by 7% to 57.8 billion. Now let's talk about corporate and investment banking segment, CIB. Their revenue was 70.6 billion, up 18% year over year. A net income of 6.6 billion, a 59% increase in year over year income. Now the key drivers for this were investment banking revenue surge 46% year over year to 2.6 billion. Fixed income markets revenue rose 20% year over year, supported by high activity in credit and currencies. Now let's talk about the other segment, which is asset and wealth management. Revenue 5.8 billion, up 13% year over year, driven by higher management fees and strong net inflows. A net income of 1.5 billion, which is up 25% year over year, pretty good increases, and a assets under management, which was 4 trillion, a increase of 18% growth, which long-term and net inflows of 776 billion. Now let's talk about the capital and liquidities. A CET capital ratio of 15.7%, standardized, up from 15% year over year. Average loans 1.3 trillion, up 2% year over year. Average deposits, so how much money did people on average deposit to them because they are a bank, a 2.4 trillion. Also a interesting thing, my brokerage account where our trade, which is in Europe and it is Trade Republic, has actually, my money is actually at JP Morgan. So one is the neo broker. Then they have to hold your money somewhere, and guess what? They're holding it at JP Morgan. And guess what? Each time a German, Austrian, and also I think the French also have Trade Republic. It's pretty Western Europe only. When they invest their money, JP Morgan takes its cut. So once again, shareholder returns 7.5 billion returns to shareholders, including 4 billion in stock buybacks and 3.5 billion in dividends. So 4 billion in stock buyback. That is good. What I don't like is when a company dilutes its shares. What I do like is when they buy back their shares, although don't know where to invest their money, what they do, and also pay dividends. That is pretty good. And JP Morgan is a really good dividend paying company. Now, full year 2024 and the year 200, there were some pretty cool years. So full year 2024 performance. Emmett, net income 58.5 billion, a 8.9 billion increase from 2023, a revenue of 180.6 billion, up 11% year over year, driven by strong non-interest revenue growth, which is up 21% year over year. Okay, now the EPS 90.75, a significant rise from 16 in 2023. Earnings per share 19.5. Interesting what their PE is now. I'm going to find it out in a couple of days. So let the markets just do their thing. Let them stabilize a bit because the price is up and down, up and down. Okay, now strategic outlook for 2025. 2025. Almost at 200. So strategic outlook for 2025, net interest income expected to be approximately 94 billion with balance sheet growth, particularly offsetting lower rates. Okay, I think I already said this, but JP Morgan is kind of interesting situated. They're situated for interest rate growths and interest rate declines. They're pretty good, pretty well situated for both possibilities. Okay, expense management forecasted adjusted expenses of roughly 95 billion with continued investment in technology, cloud infrastructure, and consumer financing initiatives. So credit cost anticipated increase in net charges of particularly in card services with an estimated rate of 3.6%. Okay, so JP Morgan, pretty good results, highlights its ability to navigate complex market conditions, as said, situated both for low and high interest rate markets. The bank effectively capitalizes on growth opportunities across its diversified business lines. Okay, so let me hear what you think about JP Morgan's report here. Once again, you can check it out on my blog. It's already up. And like and subscribe. Catch you next time. I'm Noah BM. Bye bye.